Welcome to the Victor H Investing live stream. I am Victor, and I wanted to review the stock market action for today, review the week, and see some patterns and I guess some trends that I'm picking up on that I'd share with you. I'll share with you the stocks that I bought today, what's on my buy list, and kind of just review where I think the market's headed and what my investing plan is going to be. We had a really nice live stream yesterday, and I hope a good number of people joined today as well. We'll see. And as people join, please ask your questions and comments so we can go in the direction that people want to go in. Before I jump into any analysis, let me just remind you I'm an individual investor, just sharing my experience and sharing my opinions on particular companies. And all the opinions are really expressed about what I intend on doing. I don't recommend you buy or sell any particular stock that I cover. I don't recommend you buy or sell any company that I cover. This is not financial advice, and please make your decisions really, really carefully. All right, so thanks for joining. So the market ended up a little higher today by about 0.5%. And for the week, it's looking good for the last 5 days. Now, here's what worries me is we've had a really nice run up from the October 27th date to now. It's up 26.64%. And that's what worries me. I think we had a pullback starting on March 28th, and it pulled back 5.46%. which I thought was good. I thought if we have high stock prices and we see stock prices go down, that's good. That's like taking medicine and having the stock market be priced a little better. But now that we're seeing, the market rise again, I continue to think, hey, just the market's priced too high. And I'm going to be careful not to overbuy right now. I'm going to try to accumulate cash, because I suspect that at some point we're going to have one of these corrections, like the one we had in 2022 or the one we had in 2023 that was 10.14. These corrections happen, and I think we're setting ourselves up to have a pretty good one. If you look at from September 30th, 2022 to now, we're up 45.4%. That's a great return. I mean, it's been great to see stocks go up, but that's just not sustainable. The stock market goes up and down. Over time, equities go up in value, but they don't go up in a perfect graph, up and to the right. So that's what's on my mind. That's how I'm adjusting the way that I'm investing. I'm accumulating more cash. I'm being careful not to buy too many stocks. I'm being really selective on the stocks that I decide to buy on. So a couple companies announced their earnings. I'm going to start with Roblox. And Roblox, and before I jump in there, I forgot to go over something. So when we look at the biggest companies really do have a big impact on the overall S&P. And here's the biggest stocks, sorted from biggest market cap, to smallest in the S&P. And you can see that there's a lot of green on the screen. You got Microsoft, Apple up. Apple's been having a nice couple of weeks. You got Amazon up nicely. Meta's up. Berkshire's up. Looks like the semiconductors had a bad day. I think it was led by ARM having a bad earnings yesterday. And I don't know that it was bad. They just didn't have a super enthusiastic guidance report. So I would say that wasn't too bad of a report. But overall, you see a lot of green on the screen, and that's why we had about 0.5% increase in the S&P. Remember that the S&P is made up of 502 of the biggest companies in the stock market. But if you look at the top 10 stocks and you look at their market cap, you have a concentration of 35% of the S&P is concentrated in these 10 stocks. So where these stocks go tend to really influence the market strongly as to where the S&P is going to measure. Not rocket science. I think a lot of people knew that. Just like to remind myself of that those big stocks is what moves the market. All right, so some stocks that really caught my attention today that had earnings, starting with Roblox. So Roblox is a company that develops online entertainment platform. I like to think of them, they're the YouTube of video games. People develop video games on their platform. The actual players will go on Roblox, play the games. They have a way of monetizing how players play the games, and it works. The developers make money, they use the platform, and the company grows the platform. It's a lot like YouTube, which has really worked for Alphabet, obviously. So today the stock was down 22%. Wow. Incredible how much it dropped. Year to date, the stock's up close to 32%. And really the last 5 days has just been, it just fell off a cliff. It was at around $39 a share. Now it's at 30. So what is so bad with Roblox? Let's take a closer look, because this company I've always thought was really, they have a really interesting business. I like the fact that they resemble YouTube for video games. Video games continue to grow, and younger people love video games. So I think a platform of that type is a really good idea. So I really like the business. I like the industry. I like the uniqueness of it. And they have a really good competitive advantage. They have a platform where all the other video game developers, they don't quite do it like Roblox do it. This is more of a like the sharing economy, social put into one. The market cap of the company is 19 billion. The revenue is 2.8 billion dollars. So you're paying, I guess, about 7 times sales. Not too bad for a growing business. They are a buy rating, and analysts say it's discounted by 50%. Wow. So why did it drop so much? I continue to ask myself that question. Company is growing. It's growing nicely. It grew 25% last year. Interesting. Well, that looks really good. I guess the earnings were really bad. The other thing, why is Roblox catching my attention? Operating cash flow. They generate cash flow. And you know that I love cash flow. And they generate free cash flow because the CapEx is not as much as their cash from operations. So that's why my valuation is good for Roblox. Now, we're going to look at their forecast, and then I'm going to look at the actual earnings report that Roblox had announced. So again, we have 22 analysts covering the stock, and they're saying, hey, we think it's discounted by about 50%. That's a pretty good discount. Analysts expect that the company is going to have a loss in 24 and a loss in 25. But again, they're generating free cash flow, so not a big deal. And a loss in 26. And a growing business like Roblox, I'm willing to accept, losses on earnings per share, because a perfect example is Amazon. They lost money for a long time, and obviously now they're worth a couple $1 trillion. All right, so it looks like historically the metrics and the fundamentals look great. So let's look at, the earnings release and try to figure out, well, what happened? Why were investors so, bothered by this earnings report? So here's their earnings, investor relations website. Okay, so first quarter earnings. All right, so revenue up 22% year over year. That's positive. Bookings up 19%. Positive. All right. EBITDA was negative, which is not good. Net cash and cash equivalents, $238 million, up 37%. Very good. Engagement by users up 15%. Those things look good. So their growth was good. All right. So what else did they say? What caused? Okay, guidance. So their guidance And I don't know what their run rate was. I guess we can compare it to the first quarter. Bookings. So revenue was 800 million in the first quarter. So they're looking sequentially. I mean, revenue is going to grow nicely by about, looks like 5-6%, and bookings look good. All right. So free cash flow between 16 and 23 million. That is a little bit low. The cash flow is a little bit low. CapEx 45 million. All right. Okay. So for the full year, they're going to be a 3.4 to 3.5 billion dollar company. That's a good sized company. I think they're at 2.8 billion now. So that's really good growth. Man, what gives? That's a great growth. So bookings will be around 4 billion to 4.1 billion. Again, I like those numbers. So that's deferred revenue. I don't have a use for that. And then cash. Net cash position is going to grow to 530 to 600 million. CapEx, they're going to spend about $180 million into the business. And free cash flow is going to be between 350 and 420 this year. So I'll use that 350 number in my valuation. So overall, my impression of the earnings was I like the revenue growth. That was a positive. There was some kind of like, some concerning details there. But I tend to focus on, is the business growing top line, the revenue? Is the business growing, expanding, getting more customers? Answer is yes. Are they generating free cash flow? Yes. They're not profitable yet, so I'm not going to go and talk to them about earnings per share. So here's their balance sheet. Again, their cash is growing. They got upwards of $2.4 billion of free cash if you measure cash and short-term investments. So 2.4 billion of cash, and I think they don't have any debt. No, they do have a little bit of debt. They have 1 billion of debt. So they have net positive. Hey, thanks for joining, Tom Liu. You bought it at 27 a share. What are they trading at right now? All right, so you're up on the stock. Good job. All right, so they have a net cash positive position. Again, their revenue is growing. That's good to see. And then cash from operations, 238, good. And then CapEx is 46. So they're generating free cash flow. So, all right, so let's take a look and see if we could figure out, and I'm going to try to figure out what they're worth. So I'm updating my analysis on Roblox. I'm a stockholder. I don't know if I'm going to buy more shares or I'm just going to hold my shares, but let's take a look. So Roblox, I only value principally on their free cash flows because they don't have positive earnings per share yet. So last time I updated this was in February. I'm going to update it today. All right. So we saw that in their guidance, it was going to be at least $350 million of free cash flow in 2023. And that's a pretty good number. And I said 2023, it's 2024. Sorry. So that's 2024 guidance. Cash flow is growing very dynamically. So I'm going to go with 25% growth rate in the first 4 years. And then long-term growth, grow it by 6% in terminal value. This is a very high growth business, high growth company. So based on those factors, and I'm going to use a higher than average discount rate because it's a young company, they're not profitable yet, of 10%. I get an intrinsic value of $12.8 billion. Now, looks like Quags joined. Thanks for joining, Quags. Now I got to update my cash and debt. So let's take a look at that. All right, so so here's cash, right? We got to add these two lines, the 866 and the 1543. 2.4 billion. And then the debt, I think, stayed the same at $1,005,000,000. So I have an equity value of $14.2 billion for the company. The market cap is $19,200,000,000. And their shares outstanding 631. Okay. So I think each share, based on free cash flows and based on the projection I have, is worth about $20 a share, and they're trading at $30.42. So right now it's a little overpriced. It's priced at a premium of 33%. So, maybe the less than really enthusiastic guidance on the stock is what doomed, the Roblox stock and sending it down 22%. As I look at my investment, now this is one of the companies where I look at the company and I just love the company. I think that their model is really going to go places. I've invested $6,200. My investment's worth $4,700. So I've lost 23% of my investment. But I really like the company. I think it has a lot of value. And I would not be surprised if Roblox gets acquired by an Alphabet or a Meta or a Amazon or a Microsoft, because the actual platform itself is really valuable. You think about YouTube, super valuable. It grows around the world organically because people like myself are creating videos as well as other people. The mainstream media puts their content on YouTube. Well, Roblox is kind of similar. They're really growing the population of users of their platform. And I think that's going to really continue to just get more and more valuable. All right, so that's Roblox. That's one stock that really caught my attention. Let me catch up here on messages. Looks like random. Hey, Victor, I told you about Otter. Oh, they went up by 10% or so. Let's take a look at that one in a bit. Well, thanks for the tip. I'm glad it went up. I hope you own the stock. Hope you made some money. And then thanks for coming back, Random. Thanks for coming back, cinematographers. So thanks for joining yesterday. I appreciate it. So I'm going to cover some stocks that I'm buying, and I never recommend you buy or sell any stock I cover. I'm just sharing what I do, but I'm going to get to that. So stick around, and I'm going to go over the list of stocks that I'm buying. All right. So the other stock that I wanted to look at is probably a stock that you may know, you may not know, and that's MPW. And MPW is a troubled company. It's a real estate investment trust. It's a high-risk stock. And if you look at the last 5 years, they used to be just a REIT. They paid a high dividend. Then they got one tenant that was their biggest tenant get into financial trouble. And that tenant has really driven the company, down to a really low stock price. The MPW has been selling off properties, trying to deal with the problems they have. I think they're doing so, but it's just kind of a stream of bad news. If we look at more of like the 1 month, it's up 15%. So this is a high risk stock that I decided to invest in, and I continue to buy shares because I think they're going to make it. And if they make it, I think it's worth more money. I already ran the valuation because I wanted to see where this stock was going to land. I actually recorded a video and put it on my channel, but they have a 12.79% dividend, and they can afford this dividend rate because I did the calculation, and their funds from operations really dictate how much they can pay as a dividend. And so this dividend is pretty much okay. Price target, analysts think it's discounted by 24%. And those are the big ticket items. When I look at my valuation, and I show this on the video if you want to watch that, but I can show it to everybody real quick. So I have the stock discounted because I value a company based on a REIT, real estate investment trust. I value it based on the dividend, and I believe the dividend, the payout ratio on available funds from operations is only 63%. And if I value it using the dividend, it's worth far more than the current stock price by 93%. If I value it using earnings per share, it's discounted by 17%. So combined, I have a discount of 55%. So I continue to buy shares in MPW, and the stock for the day, it traded down overall. But if you look at the single day, it really came out of the gate and went down, and it was down, I don't know, 3-4%, and then it went up. And I happen to think, you know what? That's a very good signal. That means that people got their heads around the earnings, the financials. They're seeing what I'm seeing, which is this business is likely going to make it. And if we look at the short selling, the amount of shorts, this stock is shorted by 36% of the shares are shorted. So this is a short squeeze possibility. And this is one that could really squeeze hard because it's a small company. And we'll see if it happens. I think if they start getting good news, look out, MPW, here we come. Other things that I like about the stock is now they have trouble, but they have assets on their balance sheet that are real hard assets. They own properties, and you can sell these properties, liquidate them, use those proceeds to keep your company going. That's way better than a company that maybe is a manufacturing company and they have, I don't know, $5 billion invested in their factory. It's very hard to sell stuff out of your factory. Nobody wants to buy your used machines or shelving and stuff like that. So it's pretty much a sunk cost. But their balance sheet, these are sellable assets. So that's one of the things that I like about MPW. And it's an earnings that I really saw and I thought it was going to be fireworks today, that stock was going to go up 20% or dive another 20%. It wasn't that, but I'll take a 5% gain and a really nice chart on the day. You see, these are beautiful charts. That just means that it's building momentum, that this is a solid gain where investors came in and started buying up the stock. So I'll take it. We'll see how it goes. This one I monitor weekly, if not, daily. And if it starts squeezing, it'll be a fun one. I've been a part of a couple of squeezes, and Big Five Sporting Goods. I bought it at $2 a share at one time. It rose to like $10 a share. I was looking great. But then there was like a squeeze on the stock, and it went up to $40 a share. So I sold all my shares and did really well with Big Five. I tried to buy it back into Big Five, and now I'm losing money on it, but I already made so much money on it. It's all right. And then another stock that I've had a couple of others that had a similar occurrence. We'll see if MPW does that, if there's a short squeeze. All right. And then the last one is going to be a company you probably have never heard of. It's a semiconductor company, but they do semiconductors that they're not AI. So it's not like, this is going to be an NVIDIA-like stock, but it went up 9% today. They pay a nice dividend of 8%. And this is a semiconductor company, a $1 billion company. And remember, I think yesterday, video to video, I shared that, hey, my small caps are just not doing great. And here's an example. Over the past year, it's down 16%. And just my small caps haven't been doing great. This one, the analysts say, hey, it's a buy and it's discounted by 40%. Had a really good day today, but you can see that it's had an awful year. Now, looking at their guidance is what got that stock to pop. Their earnings came in and earnings were acceptable, but management went out of their way to show that, hey, their principal markets are like automotive and certain products that, are like appliances and so forth. And they're seeing their forecast toward the end of 2024, they're going to be selling a lot of products. So when they said, when they shared that in their earnings, that's when the stock really took off. So that's Hymex Technologies, a stock that really caught my attention, and it's part of my portfolio. All right, so let's take a look at all right, the 3 stocks that I bought today. I'm going to go over the 3 stocks that I bought today, and then we're going to hit Otter, and then a couple other stocks that I had. Keep the requests coming. Let's see here. Quags has got one. What do you think about semiconductor ETFs? Yeah, so I like ETFs. Now, what do I think about semiconductor? I think that semiconductor is overpriced. I think semiconductor is it's a industry that has 2-3 really good years followed by 1-2 terrible years and so forth. And if you have cyclicality like that, you're just not going to have these upward charts. It's not like, let's say, an Alphabet business or a Microsoft business that just keeps going up to the right. So I like ETFs. Semiconductor right now, I think, is overpriced. I'm not buying. I'm being very careful in my semiconductor investments. I'm not buying any semiconductor companies right now. I own a little bit of Intel, like a little bit. I own a small to medium-sized position of Qualcomm, and I own Himax. I own like $25,000 of Himax, and I've owned Himax for some time. I like their dividend. So that's my comments on semiconductor and ETFs. So Randon's got a comment. Take a look at PLAB. So we can look at PLAB. All right. So the 3 stocks that I bought, first one is Airbnb. I went over this stock yesterday on live stream, and my comments basically are is I really like this business, and I thought their financials, the first quarter earnings report, they really did well in the first quarter. They positioned that the second quarter isn't going to be as great as the first, but the third and fourth quarter would be. So overall, I took advantage of a stock drop, and it was actually down a little bit more than that today. No, it was about that amount. And I bought $1,000 of Airbnb. So that's one of the stocks that I bought today. The other stock that I've been accumulating is Comcast. And I've done really well with Comcast over the last couple of years. I owned a nice position. I sold it all. And then it really went down. If you look at the stock, really went down. I bought some. It went up. I sold at the right time. Then it went down. So this stock here continues to go down. If you look at the year to date, you see how it's really come down. But as I analyze the company, and I did a video on this company recently, I like the dividend. It's a very good dividend. It's, I think, discounted really well. So do other analysts. It's a very good known company, Comcast. They have the movie business. They have their Xfinity broadband business on the East Coast. So this is a really good company. And I continue to accumulate shares in Comcast. I bought $500 of Comcast today. And then the third one is Nike. So Nike, I can't believe Nike is, discounted the way it is. This is the number one shoe company, and it was really discounted. I analyzed the company, started buying around this low, and then it really rallied, and it's been coming down. So as it's come down, I'm accumulating shares in Nike, about $300 in Nike, just because it wasn't a big pullback today. But on every negative day right now, I'm trying to accumulate Nike. I wouldn't mind having a $50,000 position of Nike at some point. It's a really good company. I'm not buying it for the dividend. They do pay a dividend. I'm buying it because they're number one in their category. If you look at their industry, they're number one. Number two is quite a distance behind them. Analysts think it's discounted by 24%, and so do I. I think it's discounted. So I bought some Nike. All right, so looking at the comments, and then I'm going to get to the stocks that you guys wanted to look at. Comment 1, semiconductors are cyclical. There are different cycles for different sectors. Qualcomm was underpriced a little while back as their customers were going through a rough patch. I agree that within semiconductor, you could say that you could have some semiconductors that are doing really well right now and others in the semiconductor industry that are doing, poorly. It depends on what their end market is. And you really put out a really nice example. Qualcomm has a different end market. Their end market is the smartphone end market. It's no big surprise. Apple, they haven't been growing because smartphone sales weren't that great. Samsung was having the same trouble, but that's beginning to take off again. So we'll see where that goes. But overall, my feelings about semiconductors is the same, which is if you buy at the right time, you hold for the right periods, you can do really well. I've done really well with semiconductor. I own my most recent biggest success is Broadcom. I bought it at the right time. I sold it in 2023. It's continued to go up. I probably left 20% on the table, but I made, like 60% on the stock. So I'll take it. All right. Next comment, random. Okay. It's going to get better as the auto sector comes out of its rough path. I agree. And the auto sector, continues to get more semiconductors in it, more electrification of those cars and so forth. So I agree. I agree that demand on semiconductors is going to continue to grow, but it still remains cyclical. Okay, so first one we're going to look at is Otter. Looks like, so just to remind myself, Otter Tail Corporation, subsidiary electricity utility. Okay. So this is an electrical utility. It was down 1% today. Market cap of 3.8 billion, 1.36 billion in revenue. This is the one that we looked at yesterday that has that beautiful chart. And overall, I mean, it's a good company. It's just, is it now overpriced because it's run up so much? Their financials, if I look at like their cash flow, they have $117 million of free cash flow in 23. Year before was even better at around 200. So I'll use the 200 number times 20. That's 4 billion. They're priced right around where I think I would value this company. Maybe this is discounted a little bit, but it's always, you look at a stock like this and, am I showing up late to the party? Is this stock going to begin to kind of come down? Is it hyped up at all? Like now power consumption, it's here to stay. It's so it does electric utility and manufacturing of plastic pipe business. So that's interesting. They do two things. Okay. They had been growing and then they had they did not grow. They actually contracted in 23. And their forecast, not a lot. No, the analysts don't cover it. I think because they lose money. No, their PE ratio is there. Forward P is 16.98. I mean, it's a good-looking company. Again, my biggest concern would be buying in late on that stock. So that's Otter. Let's look at Plab. So Plab, Photronics, together with subsidiary, manufacture and sale of photomask product services in United States, Taiwan, China, Korea. So they do integrated circuits, flat panel displays. Okay. Onto semiconductor wafers. Okay. So this is in the semiconductor industry, I believe. Technology, semiconductor. Okay. Market cap of 1.86 billion, nice and small. No dividend. They have a forward PE of about 13. Okay. Analysts think it's overpriced, that it's overpriced at 28%. We'll take a look at that. So 1.86 billion. If we look at cash flow, they produce good free cash flow. Looks like in 2023, they produced free cash flow of 170 million. Year before, they produced free cash flow of about 162 million. That looks good. So 170 million. Are they growing? They are growing. Looks good. So yeah, this would probably value quite well. Yeah, this one would probably value with a nice size discount, like 30, 40%. Looking at their forecast, one analyst has this opinion. So that's not a lot of it's not a lot of data. The company's supposed to have a nice earnings per share. This is a good company. This is a really good company. It's a little small. It's a $2 billion valuation. And I'd want to kind of get my head around what are their end markets? And are those end markets set to do better, worse? Where are they going to go? But this is an interesting company. Yeah, good idea. All right, so looks like Plab's got a company. They make photo masks. Okay, so they sell to like TSMC. Okay, so they're probably the whole supply chain in semiconductor. All right, Quags, what do you think of Sigi? Okay, cool. So I'm gonna put Plab on my watch list. Like I'm gonna do some more analysis on it. I think I saw enough there for me to be interested and kind of dive deeper. In fact, let's go ahead and kind of look at that and value it really quick. All right, so let's take a look at Qualcomm, and then we'll use that as kind of a good compare. So Qualcomm is a big giant company, but I'm just going to take the model that I use for them, and I'll use it for Plab. All right, so this is a small company, so I'm going to go with like a 10% discount rate. They've been growing nicely. I was using about $170 million. Okay. And were they growing that free cash flow? I think they were. So if you look at their cash from operations growing real nice, they went from 143 to 300, more than doubling in 4 years. Their CapEx, as expected, they get bigger, more factories and so forth. So that's a really nice growth rate. It's $2 billion, so it's not like they're a giant company that's going to have a hard time growing. So I'm going to go with about a 15% growth rate on the first 4 years. And then long-term growth of 4%. That's fine. All right. So the intrinsic value of all the cash flows is $3.4 billion. Let's add the cash. Cash and cash equivalents is $512 million. And then the debt, long-term debt's $18 million, not a lot of debt. And then $6 million. So $24 million of debt. Very good. I like companies that don't have debt. That means that they take pride in kind of like not having a lot of problems. Okay, their market cap's 1.86. So, and shares outstanding are 63 million shares. So I think each share is worth $29. $62, but the current stock price is $29. So big discount. These guys are producing really good cash flow. Earnings per share. And this is financial forecast. So $2.19. So the PE, I'm just going to use a 12, small company, grow by 4. That's fine. So the earnings per share doesn't value very high, but still combined, it's a discounted company because of that cash flow. Cash flow is king for me. I always use it, 2/3 as to my valuation. And this company does value. This does provide a discount when I do my analysis on it. So I'm gonna put this guy on my watch list and come back and do more work on it. Yep, I'll come back and work on it. All right, good stuff. Thanks for the idea. All right, let's take a look at Siemens. Siemens. All right, I've heard of Siemens. And this is a big cap. Okay, this is Siemens Technology. Okay. So this is like the General Electric of Germany. And they have a forward P of 16. Dividend at 2.56. Looks good. No analysts cover. I guess no analysts in the United States cover it. If we look at, so they have a market cap of 156 billion. We look at their cash flow. They're at 7.2 billion in cash from operations. You take out CapEx. Yeah, I think we're gonna have to go to their website because I don't think companies in Europe, the way they create their financials is different than the way they're created in the United States. This website I use, it's made here in the United States, developed here in the United States, and it uses a structure of like American, I guess, reporting standards, and that it's not fitting this company. So let's see if we can get to the website. All right, so here's Siemens. And Siemens. So this was reported on December 31st, and this will start. So this is their first quarter. I guess they have a unusual year that I guess started October 1st and ends on December 31st. So it looks like they grew a little bit. The revenue grew 6%. Looks good. Here they break out their different industries, but I'd like to get to something that's easier to use. So let's go with, here's their press release, presentation. Guess we'll try this guy. All right, so this is income statement, and it was growing, I think, at 6% top line revenue. Okay, we got that. I want to look at their statement of cash flows. So this is their balance sheet. This is cash flow. So here, cash from operations, 1.4 billion for the quarter, and CapEx is 400 million. So it did about $1 billion for the quarter. Now, if we did a quick, looking at going back to their valuation, so they do about 4 billion in free cash flow. It's not a really growing business, right? They're growing 6%. So that probably multiplied times 15, and that gets us to about 60 billion in market cap. So I'm going to fall short on this one. I would not be able to value this company anywhere near this market cap because their cash flow based on this market cap is not very high. If you compare this one to, like, let's say Chevron's a $300 million market cap, but they produce big cash flow, 35.6 billion minus 15. They're doing $20.5 billion of free cash flow. You multiply that times 20, you're up to 400 billion in market cap. So I think that the other one isn't going to look all that great because it doesn't produce really high free cash flow. Okay. So that's my opinion on Siemens. Thanks for the question. All right, cool. So thanks for the questions, guys. It looks like, overall the market is, I think it's carefully going up, and we'll see how tomorrow ends. I don't think we have any big news like economic news for now. I think people are going to wait till June on that. And the earnings reports that are coming, they're for smaller companies. It's not like these big needle movers like an Apple or a Microsoft. So the smaller needle movers or the smaller companies aren't going to really push the market one way or another. So I think the market's carefully going up. I still think we're going to have a good pullback. And as mentioned, I'm looking forward to buying companies at better discounts than we're seeing today. All right, so those are the stocks we're going to cover today. Thanks for the questions, guys. Thanks for tuning in. I really appreciate it. Really appreciate everybody's support on the channel. All your comments, all your views, I really appreciate them. Everybody, have a good night. Good luck investing.